today on the Tearsheet Podcast.
I think if you think traditionally about credit bureaus, you think, well, they serve lenders. It's a B2B marketplace. And more we think about being a B2B2C player, where at the end of the day, we're enabling our lenders to serve the consumer. And at points in their life when, it's really big, important decisions like buying a house, buying a car, maybe getting their first job, maybe getting their first apartment. And the cloud and APIs and advanced analytics and data play into how do you make that more of a seamless consumer experience.
Welcome to the Tearsheet Podcast. I'm Tearsheet Editor-in-Chief, Zack Miller. Today's guest on the podcast is Experian's Chief Product Officer, Greg Wright. Listening to Greg, you get a feeling for how the role of credit bureau is changing, to the point of even who they serve is evolving. We discuss fintech trends like cloud, APIs, and alt data, and how they're impacting Experian's ecosystem. Greg shares his thoughts on expanding credit to more people and how the credit score is changing with the times. Greg Wright is my guest today on the Tearsheet Podcast.
Hi, Zach. Thanks for having me on the Tearsheet. Very excited to be here. My name is Gregory Wright. I'm the Chief Product Officer for the Credit Bureau from Experian in North America. Essentially what I do as a Chief Product Officer is I drive the strategic vision of what we're doing with the Credit Bureau, what our product roadmaps look like, and how we drive growth and innovation through bringing innovative new solutions to the market that both serve our consumers as well as serve our clients in the lending space.
Amazing. And welcome to the podcast.
Thank you.
We talk with a lot of the participants on this podcast about certain trends, cloud, APIs, sort of embedded. We even have a conference coming up in 2 weeks about embedded finance, alternative data. These are themes that we deal with a lot. How have how have fintech trends, I guess, impacted the credit ecosystem?
Yeah, so at Experian, I think if you think about the credit bureau traditionally, you think about big data, you think about analytics, and I think that's really an important part of it. But more and more, I think the way I think about how we drive innovation and new solutions to market is not only through data, but also through advanced analytics. So not just your traditional analytics, but through machine learning and AI. And all that rests upon having, really world-class technology platforms. And that includes having cloud-based solutions, leveraging the power of the cloud, having easy integration points through modern APIs. And so when you think about the credit bureau now and into the future, you have to think about not only the data, but also the advanced analytics and the technology that we're bringing to the table. And it really is changing how consumer credit works. It's changing how people interact with their lenders, how they interact with getting the right kinds of products. And when we think about who we want to be as a credit bureau, we want to be the consumer's bureau. And that was a mission that our CEO, Brian Casson, set us on more than 5 years ago. And what does that mean? I think if you think traditionally about credit bureaus, you think, well, they serve lenders. It's a B2B marketplace. And more we think about being a B2B2C player, where at the end of the day, we're enabling our lenders to serve the consumer. And at points in their life when, it's really big, important decisions like buying a house, buying a car, maybe getting their first job, maybe getting their first apartment. And the cloud and APIs and advanced analytics and data play into how do you make that more of a seamless consumer experience. I think, one of the biggest changes in consumer expectation is things like smartphones, instant access to apps and cloud-based solutions where things happen, at the speed of your thumb. And you expect that to be available in your pocket 24/7, not just banking hours and when the branch is open, right? So we now have to enable that for our lenders and our financial institutions and our landlords to be accessible 24/7, anytime a consumer wants to engage. And that's all, if you don't have cloud solutions with APIs and advanced analytics all behind the scenes, creating those seamless consumer experiences, you're going to become irrelevant and fall behind.
Were those skills ones that you traditionally had on your team, or did you have to look outside Experian to get some of the, I'm talking in terms of talent, people who are very familiar with cloud, APIs, alternative data, analytics?
Yeah, great question. And maybe that's an interesting opportunity for me to talk a little bit about my background too. So I'm not kind of your traditional financial services credit expert. Although I've had to become one clearly in this role. My background is more from Silicon Valley. I spent 8 years at Intuit. I ran teams for product and design and marketing for direct to small business and direct to consumer like QuickBooks and Mint.com and Quicken in the personal and small business accounting and financial world. And there I really learned how to become customer obsessed and really understand what is the job that we're trying to solve? What's the problem we're trying to solve for the end consumer, for the end small business? And I've been able to translate that into now thinking through what is the consumer ultimately trying to do through their lender or through their landlord or through their whatever job they're trying to get done, and then re-engineering how do we accomplish that through data and analytics and technology for our lenders and for our financial institutions to create the best consumer experience possible. And to your point, when I joined the team with Experian more than 4 years ago, you really have to think differently about how products partners with our development and engineering teams. We were going through a transformation to agile development, and the partnership and collaboration between sales and product and engineering had to evolve as we went through that process. And then, who you bring onto your team also changes. People who have a mobile first mindset, people who are more entrepreneurial, and balancing that with the technical product managers, with the creative, entrepreneurial, and innovative product managers, with a lot of the folks that we already had on the team, which were credit domain experts and client, facing, who really understood our needs of our clients, but trying to find that balance, because I think we were probably more overweighted towards financial services, client experts, and domain expertise. And so as I've evolved the team and working with our development teams and bringing on more agile development processes, as well as having the product managers who can engage in that agile process and innovative process, it's been a lot of fun.
Yeah, it sounds that way. So I want to go back into, I guess, another form of, or another trend at least, and it's also one we hear a lot on the podcast, and that's with not just financial data, but consumer permission data. And if that is impacting how you're calculating credit scores, or if and how that's evolving, can you touch on that trend, I guess, towards consumer permission data?
Yeah, I love that question. And again, it kind of goes back to the heart of what does it mean to be the consumer's bureau? And again, if you think about traditional credit reporting agencies, like traditional credit bureaus, you don't think of them as first and foremost thinking about the consumer journey, the consumer experience, but that's really the challenge that we put ourselves to. And I think what you see more and more in today's world is consumers want to control the access to their own data. They want to be in the driver's seat, and we want to enable that. My own personal journey, I've been working in the consumer permission data space for north of 15 years now. So you think back to QuickBooks and Mint and Quicken, those were all solutions that were actually dependent on consumer permission data. You would,
Exactly.
The majority of consumers would log into their bank accounts through those applications, download all the data, making it super simple to use products like Mint and have it just instantly with your mobile device, see where you're spending all your money and seeing all your bank account information in one place. And it's kind of almost a magical experience. If you've ever used Mint or dived in as a small business owner into QuickBooks, like gone were the days of hand entering every single transaction and every invoice and every bill payment. Like all that could just be downloaded through your bank account. And trying to create the right product experience in the consumer journey by really taking all the heavy burden of that data entry and just making that magically available to you in great charts and graphs and workflows, whether it was QuickBooks or Mint, really kind of changed how I thought about consumer permission data. And that with the right value proposition, with the right solving the right jobs for consumers, they're actually willing to share that kind of heavy speed bump of here's my bank account information, my username and my password. And even there, I think we're evolving, right? I mean, the vast majority of connections to long tail banks is still through kind of those, username, password, credentials. But we're moving into a new world of, more federated sign on and tokenization and more secure connections and direct connections to banks. So I'm excited to see where that goes, because I think it's a future that will even provide more control for the consumer if we go about it in the right way. Now, when I came to the credit bureau, I really thought long and hard about, well, how do I bring a consumer permission model to the credit bureau? And there have been ideas bouncing around within Experian for more than 10 years about, hey, why don't we have consumers contribute data to their credit report to improve their credit access, to provide a more holistic, comprehensive view of the credit report. But the reality is, it was really hard. There's a lot of regulations you have to work through. There's the technology of the credit report itself that was still running on relatively legacy technology, and a lot of barriers, right? And so that's what I love about innovation. Innovation is all about driving through barriers, questioning the way we always did things, and seeing if there's a new way we can solve a job for a consumer. And so I'm going to maybe just talk a little bit about one of those innovations breakthroughs that we had. And we did this with a partner where similar technology to what we did at Intuit, where we could download bank statement transaction data in a read-only way by a consumer giving their bank credential information. We could download 12 to 24 months of bank statement data. And we developed a product around that called Experian Boost. And if you watch any type of live sports, you've probably seen a commercial for Experian Boost, and you may have seen our purple cow. But behind all the marketing, which is awesome, is really a fundamental change in how we view the credit report itself. That consumers should be able to provide a more comprehensive view of their financial life, and that should improve lenders' ability to lend to them because they see a more complete financial picture. And one of the ways that we, challenged the status quo on this is historically, and Experian has been trying to get, maybe for 10, 15 years to get utility providers and for mobile carriers and for TV and cable providers to provide and furnish data like banks do to the credit bureaus. But historically, they just have not done that. And so that data, your positive bill payment history, is not part of your credit report for the most part. There's pockets here and there where we get the data, but generally that's not furnished to a credit bureau. And so lenders can't see that you've been paying your bills on time for 2, 3, 4 years. Now, what we showed through advanced analytics and our analytical, taking a look at the credit bureau data itself, plus the ability to see positive utility payment, positive mobile carrier, paying your cell phone bill on a regular basis, actually does show that you are a better credit risk. And we were able to do that by doing analysis with the FICO score and showing past behavior. And then if we added in the positive bill payment history to that behavior, a year back, 2 years back, and then see how the score actually adjusts to that positive bill payment history, you actually see that the consumer behaves at that higher credit score. And so we wanted to make that available to all consumers, and we wanted to do it for free. And so you may know we have Experian.com, which is a free service we provide that gives you access to your credit report. You can see your credit history. It also has some other services around identity protection. But essentially through that service, that free website, if you go to Experian.com, you can now actually go to Experian Boost, add your bank account where you pay your bills. And when you do that, we get your bank credentials, we download 24 months of bank statement data, which again is read only. And then we categorize it and find all your positive bill payment history, whether it's utility bills, your water bill, your electric bill, your cell phone bill, your cable TV. Now we've added Netflix and Hulu and any other streaming trends that are going on. And now you can add that directly to your credit report. It's not kind of added as a supplement. It's added as an actual trade line to the credit report itself. And to do that, we had to break a lot of things. We had to be able to instantly add new data to your credit report, which if you know anything about credit reports, generally that's updated on kind of a monthly basis. So now in a real time on a phone, you put in your bank credentials, within minutes, it's added to your credit report. You can see it now on your credit report. Not only that, we had to instantly recalculate your FICO score and send it back to you. And so again, within minutes, you can connect your bank account, add your trade lines that are utility payments and cell phone, and then instantly see the improvement to your credit score, which we call, Experian Boost. And, from the day one of starting this project, we said, this can't be 24-hour turnaround. It can't be 2-week turnaround. This has to be real time. While you're on a mobile device, you can instantly see the impact to your credit score. And what we see, we now have had millions of people connect their bank account information to Experian Boost. Over 2.5 million have seen their credit scores go up. Basically about 2/3 of the time, someone will see an improvement in their score, because if you think about it, this is positive bill payment data. So it's just you paying more bills on time. And the best part about it is, as a consumer, you are completely in control. If you decide a month from now or 2 weeks or even the next day, you can turn the account access to your bank account off. You can delete specific trade lines if you don't want to be sharing that data going forward. So you're 100% in control. And we've seen just people are completely delighted. Like, they are surprised and blown away that instantly they can see that improvement.
So that's a good segue into the next question I had for you, Greg. And that has to do with, it sounds like some of those changes you're making are expanding credit, giving credit to people who might not have been able to access it before, or people to get higher credit because they're judged on different criteria. Are there other ways that you're thinking about expanding credit? And I guess, how does that play into the modern credit score? How has the credit score evolved to incorporate that?
Yeah, so again, the Experian Boost is a great way for consumers to take control and add their own data to their credit report instantly and see the improvement. But we also work very closely with lenders. 89% of lenders believe that harnessing and using what we call extended FCRA data, or other people call alternative credit data, also is a way to serve more clients and serve more consumers. Especially when you think about what we call thin files. If you only have a few credit cards or trade lines on your credit report, it might be difficult to score you accurately. Or if you're new to credit, or maybe you don't have a credit report yet, that makes it really hard for people to get that kind of first-time access to credit. And so we look really carefully at other data sources that are still under the regulatory framework of the credit reporting process, but are not traditionally on your credit report itself. And so, we've invested in and acquired assets like Clarity Services, which is an alternative financial services space that serves the payday lending and short-term installment loan space. That actually is really accurate credit data that doesn't show up on your credit report. We have other assets we've acquired over time, like we have what we call the Rent Bureau, which is actually looking at and trying to collect rental history, and paying your rent on time is actually also another really great credit determinant. And also things like, did you leave on good terms with your landlord the last time you rented an apartment, or did you leave with damage, or you didn't pay last month's rent, or other things? Those have credit worthiness impacts as well. And so we're looking at how we can leverage different types of data assets. And then when you combine the alternative data assets or extended FCRA data assets with advanced analytics, that's where you can really drive up predictiveness when you might have a thin credit report, or you might be in subprime or deep subprime. And so as lenders want to go expand their universe of who they can lend to without taking on a lot more risk, one of the ways you do that is looking at these extended FCRA or alternative data sources. And one of the areas that Experian has also led the innovation wave on is also looking at trended data sets. So
what's
traditionally
that?
A credit report is a snapshot. It's like, in a moment of time, how many credit cards do you have? What's your outstanding balance? Are you paid in full? Are you paying on time? But trended data looks at 24 months of behavior. So is your utilization rate going down over time? So you're actually deleveraging and you're probably a better credit risk? Or are you suddenly ramping up your utilization on your credit cards and personal lending? And so looking at those behaviors over time can show things around payment stress and ability to pay and other types of credit worthiness attributes that lenders can use to say, okay, this person in this snapshot in time may have the same credit score as this other consumer, but one's deleveraging and reducing their use of credit while the other's increasing their use of credit. And so that might actually indicate that they're actually a different level of risk. You combine that trended data risk attributes along with alternative data assets, and suddenly you see again this broader picture of who the consumer is. And so when you think about trended data plus the credit report plus alternative data sets like alternative financial services or rent behavior, combine them with Boost data with utility payments and other things, you can really see how beyond your traditional credit report, you can see a lot more about where that consumer is and are they ready to take on a new auto loan or a new credit card or a personal loan.
I want to go back to Boost. Obviously, the ads are showing now. Was that a product that you launched during the pandemic?
Well, we launched it about a year before the pandemic hit in the US, but it was ramping up over that time. And if anything, we've seen even more interest in through the pandemic, people understanding what's happening to my credit, what's my credit score right now, how can I improve my credit score? People want to maintain access to credit during these kind of uncertain economic times. I think the good news is, we recently published an annual state of credit report, and we found that consumers are generally maintaining a healthy credit report right now. Part of that is, definitely helped by what lenders have done to help people who've been impacted by the pandemic and by the economic uncertainty and sometimes unemployment, where they've had loan forbearance or loan forgiveness programs or deferral programs. And also the stimulus packages early on in March and May, those have helped people stay cash flow positive. And in fact, we've seen savings rates go up generally if you look at the overall economic data, and that people have been paying down debt. They use that surplus in cash to actually pay down their debt. So generally we see a pretty healthy situation. Now, I think we still see, though, the pandemic is at an all-time high right now, and only accelerating into the fall and winter, and there's still economic uncertainty. So, we still have a ways to play this out, and I think tools like Experian Boost can help consumers, maintain and improve their credit score over time. I think tracking both your identity, making sure that you're not a victim of fraud during these pandemic times. I mean, I think that we've only seen fraud increase during this period. We can probably talk about some of the trends on that front as well. But it really is all-time high important to be able to monitor and track your credit score at this point.
So we have time for one last question, and I'm interested in looking forward, as you just started to do. What kind of things are on your plate? What are your priorities as you look out to the end of 2020 and the beginning of 2021?
Yeah. So one, I'll just call out, as we've seen fraud tick up during the pandemic, we've actually launched a new product that we're excited to now starting to get traction with some of our largest clients. It's called SureProfile. And it's the first time the industry has ever combined the traditional credit report itself with an assurance that this is not a synthetic identity. And we probably could talk a whole nother podcast about synthetic identity, frankly. But this is where fraudsters create identities out of pieces of other identities. And then they use that and cultivate that to then, 9 months, maybe 12 months, maybe even a couple of years later, what they call breakout. And then, they might have stacked up personal loans or credit cards or other things and then leverage those all at once, and they take all the money and then they disappear. We've been able to use advanced analytics and all of our various data assets to figure out, does this credit report actually represent a real person, or does it look like it could be a high risk that it could be a synthetic identity? And SureProfile combines, this is a credit report, and we assure that this is a real person. About 95% of the time, we can say, yeah, this is a real person. And in fact, we're so sure of that if we get it wrong, we can negotiate with lenders that will actually take part of the loss of that credit loss if they actually were a victim of synthetic identity. So it's a pretty game-changing approach to thinking about credit risk and fraud, and combining that in the top of the funnel rather than a lot of fraud checks happen after the fact. And we think trying to catch that in the very front of your lending process is the right way to go. Another, I'll just call out two other things that I think are really relevant during this kind of uncertain economic times and during a pandemic. We've collected our best predictive scores, especially when you're seeing kind of uncertain economic times and higher unemployment rates. Trying to look at credit data in a different way to see payment stress, ability to pay, looking at those trended data attributes in ways to help identify, is this consumer still ready to take on more debt? And can we lend responsibly? Because what we want to be able to do is enable clients to not just shut down and reduce their credit windows drastically. We want them to lend strategically to the right consumers who can take on responsible that debt rather than just shutting it off to everybody. Because as you know, the credit cycle is the economic cycle. And if we close down credit availability to consumers, that actually harms the economy overall. And so we believe it's our job as a credit bureau to serve our clients, to help them lend in these uncertain economic times in a way that doesn't bring on a lot of risk, but also continues to allow them to serve their consumers and actually keep the economy flowing. And so that's a really important job that we have to not only serve our clients and our consumers, but also the entire economy. And we do that through this, what we call the Economic Response and Recovery Suite of attributes. And it's a data attribute analytical set that we can bring to our clients to help them refine their lending strategies. And then we've also combined that into what we call Experian Lift, which is a generic alternative credit score. It helps you score in the no hits and the thin file spaces, leveraging all of our trended data and clarity data and alternative extended FCRA data assets, combined with artificial intelligence to build that model up. And we've been able to see north of a 25% increase in our ability to predict credit worthiness in kind of the subprime space, no hit, thin file. And we're excited to get that to market as well. And we see that all these tools are really to help lenders view the consumer and lending landscape with better visibility, with more data, with better analytics during a time of uncertainty, which should help them continue lending in a very uncertain time.
Greg, thanks for joining us on the Tearsheet Podcast today.
Thank you for the opportunity, Zach. It was really great to join you.